Yeah.
So closing pretty much right back on top of the JPM long puts at the end of the day here. Um, the Bulls tried to push it out a little higher. Ultimately, they failed at resistance of 56.30. Um, this leaves us, down on the day a bit, but flatter. Should help realize vol come down a little. Um, I think I think we've still got a little bit of support on this trend. We failed it a couple times, but closing back above it. We do have a head and shoulders here at like the 56.30 level on ES out on the 15 minute. That's not a good sign. Probably. Probably opens up like the 54.94 test or maybe lower. 53.93 to the downside. Fairly important technical level. So, a failure of this trend, this downtrend that we've been on for a while now, a couple weeks, to the downside would be like a real failure of it. Would be quite bearish. So far, the sell-off's been pretty controlled, but I think that's starting to break down a little bit now with the bounces to the upside getting weaker and weaker. It doesn't seem like anybody's really coming in and willing to buy. I mean, we kind of saw that there at the end of the day, where the last like 15 minutes, like 158,000 in volume, and it was just almost all pushing pushing the bid down. Not a great look. Dollar slid another like 50 points today, largely against the pound and the euro. Yields at the back end of the curve recovered a little bit. 2 years still down quite a lot at 3.9, but the 10-year back above like 4.2, 20-year out at 4.6, and the 30-year at also right around 4.6. Commodities, a little bit of improvement. Oil finally found, looks like a little bit of a bottom. Copper and silver up quite a lot, and gold back above 2,900. Correlation, closing the day a little lower than the peak, but not turning around at all. There's not a lot of interest in the dispersion trade right now, almost none. And the consistency of this is probably the most frightening aspect. Like, it's just selling off. Like, everyone's just getting the out. I think this is ultimately like a very bad sign. Carry trade levered up a bit today, back at around 8.55. Forward yield on volatility came down from the intraday high, but closing the day at 1850. So this is actually like we're starting to get even more demand for that forward return on the volatility convexity, but bond demand kind of starting to fall off. So a little bit more mixed, but a lot more volatile. Move, as I suspected yesterday, moved up above 110, now at about 112. That'll probably shift back down today with the rise in yields. Skew was still turning around yesterday. Not very much, but a little less demand for that out of the money hedge. Probably some profit taking getting seen there. Breath fell off a little bit more today, but still 39% of the S&P above its 20-day moving average. So, in terms of a sell-off, 40% of the index is still doing pretty well. I would say that's a very good sign of how controlled this is. Russell was actually up on the day. Dow down quite a lot, but Nasdaq recovering a bit. So we'll probably see this start to improve over the next couple of days if tech can continue to break out. Correlation jumped pretty hard today, 92.04%. Definitely not a lot of interest in the short vol side of things. Fed fund futures starting to price out a rate cut today, after almost getting back to one full cut by June. We're now just a little bit below that, and the bear steepener still picking up, but very slowly, up another 2% today. On the technical side of things, we tested the 55.23 level almost. That was pretty close. That's a pretty old That's a pretty old support resistance, but we almost tested that. Caught a little bit of a bounce, but ultimately didn't make it back above 5,600. The downside continuation of this to the next major level is 5,402. And if the data's bad tomorrow, I think we could see that pretty quickly. Possibly even break through it and start heading down towards like 5,100. And I think that's about it. So I'll see you guys tomorrow. I'll actually be here. I hope everybody has a great night. Catch you later. Peace.